So one of the questions I'm asked most often is, Jason, what's going on with rates? Where are rates today? Where do you see rates heading? And while nobody has a crystal ball, one of my favorite resources to monitor rates and rate trends is the Freddie Mac Primary Mortgage Market Survey. Now, Freddie Mac is a government-sponsored entity, so it provides a relatively unbiased review of the most common rates on their survey. They've been conducting this survey since 1971, so it's very long running. And they take a look every Monday through Wednesday of the most popular rates on 30-year fixed rate mortgages, 15-year fixed, and 5/1 ARMs. So you get a nice broad perspective on the various loan programs out there. And they survey the rates on first lien, prime conventional conforming home purchase mortgages with loans to value of 80% or better. So of course, your rate for your particular scenario may vary if it's a primary residence versus a second home or an investment property based on credit, etc. All of those other factors that go into pricing, it will vary, but this provides a good estimate of the average rates on a weekly basis over time. Big headline for the week, of course, rates remain unchanged from last week. So that has been a really welcome change over the last few weeks where we've been sort of flat in the mid threes. So 3.55% this week and last, just slightly above that the week prior. And it follows this really dramatic spike up in rates from the low threes to the mid threes that we experienced in the end of December towards middle end of January. So it's been a nice welcome breather. If you've been on the fence thinking about a refinance, you're looking at cash out options, or you're looking to purchase a home, now is the time to move forward before we start to see this go up again and rates continue to rise through the end of the year as they're expected to do. In any event, 3.55% is a fresh new high. We'd have to go all the way back here to March of 2020, March 26, 2020 to see 3.5% at that time. So we've essentially come full circle on rates back to the mid threes that we experienced in 2020. And then they proceeded lower, helped of course by the actions of our Federal Reserve, who started buying what are called mortgage-backed securities or mortgage bonds. The Federal Reserve has been signaling for quite a number of months that they plan on cutting back on their purchases of mortgage-backed securities, which will inevitably lead to higher interest rates. So I hope this information was helpful. If it was, please remember to like this post and share it with a friend so that they can take advantage of this information as well. If you have any questions about your specific mortgage scenario, I'm happy to help answer any questions you have. Run the numbers and see if you're able to save with either a refinance or get you pre-approved on a new home purchase. I look forward to hearing from you soon. Till then, be well.